What is mining? Mining is the process of extracting valuable minerals or other geological materials from the earth. These materials can include metals like gold, silver, copper, and iron, as well as non-metallic resources like coal, limestone, salt, and clay. Mining has been an essential human activity for thousands of years, providing the raw materials needed for tools, construction, energy, technology, and countless everyday products. 1. Purpose of mining. The primary goal of mining is to obtain resources that are not readily available on the Earth's surface. These resources are used in various industries such as construction, manufacturing, energy production, and electronics. For instance, metals like gold, copper, and aluminum are used in electronics, vehicles, and infrastructure. Coal is a key source of energy and electricity. Limestone is used in construction and in making cement. 2. Types of mining. Mining methods vary depending on the location, type, and depth of the resource. The main types include A. Surface mining. This method is used when the materials are located close to the surface of the earth. It is generally more economical and safer than underground mining. Common surface mining methods include open pit mining, a large hole is dug to extract the minerals. Strip mining, layers of soil and rock are stripped away to reach the resource. Quarrying, extracting stones like granite, marble, and limestone from the surface. B. Underground mining. Used when the minerals are deep underground. It involves creating tunnels and shafts to reach the deposits. This method is more expensive and poses greater safety risks. Common types include room and pillar mining, longwall mining, cut and fill mining. C. Placer mining. This involves extracting minerals from alluvial deposits in riverbeds, beaches, or other sedimentary environments. Gold and gemstones are often recovered through placer mining. 3. Stages of mining. Mining is not just about digging. It includes several stages. Exploration. Geologists study areas to find out where valuable minerals are located. Feasibility studies. Technical and economic studies determine whether mining is practical. Development. Infrastructure is built, including roads, processing facilities, and worker accommodations. Extraction. The actual removal of mineral materials from the earth. Processing. The minerals are separated from the surrounding waste rock and purified. Reclamation. Once mining ends, the land is restored to a natural or usable state. 4. Environmental and social impacts. Mining can have significant environmental and social consequences. It can lead to deforestation and habitat destruction, water pollution from chemicals used in extraction, air pollution from dust and emissions, soil erosion and land degradation, displacement of communities. For this reason, modern mining operations are often required to follow strict environmental regulations and implement sustainable practices, such as land reclamation and water treatment. 5. Modern mining and technology. Today, mining is a highly technical and mechanized industry. Advanced equipment like drilling machines, automated loaders, GPS tracking, and remote sensing technologies are used to make mining more efficient and safer. Additionally, data analysis, artificial intelligence, and sustainable practices are increasingly shaping the future of the mining industry. Conclusion. Mining is a complex but vital industry that provides the raw materials necessary for modern life. While it offers significant economic benefits, it also requires careful management to minimize environmental damage and ensure the safety and well-being of workers and nearby communities. Understanding the science, methods, and responsibilities involved in mining helps us appreciate the importance of this industry and its role in global development. Why invest in mining? Investing in mining is an opportunity to tap into one of the oldest and most essential industries in human history, an industry that continues to play a fundamental role in global economic development. Whether you are a private investor, a large financial institution, or a government entity, the mining sector offers unique advantages, high potential returns, and long-term value, especially in today's resource-driven world. 1. Foundations of the global economy. Mining underpins the global economy by supplying the raw materials needed for virtually every industry. Infrastructure and construction, iron ore, limestone, and aggregates are essential for building roads, bridges, and buildings. Technology and electronics, copper, lithium, rare earth elements, and gold are critical for smartphones, electric vehicles, batteries, and renewable energy systems. Energy production, coal, uranium, and other minerals power thermal and nuclear energy plants. Agriculture, phosphate and potash are vital for fertilizers that feed the world. Investing in mining is, therefore, an indirect investment in the growth of infrastructure, technology, energy, and food production. 2. Demand driven by urbanization and industrialization. With the global population continuing to grow, especially in developing regions like Africa, Southeast Asia, and Latin America, the demand for minerals and metals is increasing dramatically. Urbanization, electrification, and industrial expansion all require a vast quantity of mined materials. Emerging economies are building cities, roads, power plants, and communication networks, all of which rely on mining. The global transition to renewable energy and electric vehicles is driving up the demand for copper, lithium, cobalt, nickel, and graphite. Mining investments allow you to benefit directly from these long-term macroeconomic trends. 3. Strategic importance of critical minerals. Governments around the world have started to recognize the importance of securing supply chains for critical minerals, those essential to national security and high-tech industries, like rare earth elements, cobalt, and lithium. By investing in mining, especially in projects involving critical minerals, you position yourself at the forefront of green energy transformation, solar panels, wind turbines, batteries, military and defense technologies, high-tech manufacturing. Countries are even offering incentives and partnerships to investors who support local mining operations focused on these materials. 4. Attractive returns and portfolio diversification. Mining can offer high returns, especially in periods of commodity booms or when new discoveries are made. Unlike other sectors, mining often benefits from rising commodity prices, global supply shortages, increased geopolitical tensions, which boost gold and rare metals. It also serves as a hedge against inflation. When the value of money falls, tangible assets like gold and silver typically increase in value. Including mining stocks or commodities in an investment portfolio helps diversify and protect against market volatility. 5. Innovation and technological advancements. Modern mining has undergone a technological revolution. Today's operations are more efficient, safer, and more environmentally responsible than ever before. New technologies are reducing costs and increasing production, which can boost profits for investors. Automation and robotics in exploration and extraction. AI and big data analytics to optimize mineral discovery and operations. Green mining technologies that lower environmental impact. Investing in forward-thinking mining companies allows you to benefit from this wave of innovation. 6. Supply-demand imbalances create investment opportunities. Mining projects often take 5 to 10 years to go from exploration to full production. This long timeline creates periods where demand significantly exceeds supply, causing prices to spike. Savvy investors who enter early can capitalize on these price surges. For example, the lithium market saw rapid growth due to electric vehicle demand. Copper prices surged due to renewable energy infrastructure. Gold tends to spike during financial uncertainty or global conflict. Understanding market cycles and investing accordingly can yield significant returns. 7. Social and economic impact. Mining investments don't just yield profits, they also create jobs, stimulate local economies, and fund regional development. Ethical mining projects can Support infrastructure in remote areas. Provide education and healthcare to local communities. Foster sustainable practices and environmental restoration. Investors with ESG, environmental, social, governance, goals can find responsible mining companies that align with their values while still achieving growth. Conclusion: a gateway to long-term wealth. Mining is more than just digging rocks out of the earth, it's the engine behind modern civilization. From skyscrapers to satellites, from smartphones to solar panels, almost everything we use comes from the ground. By investing in mining, you access long-term global growth. Benefit from technological shifts. Protect your wealth against inflation. Diversify your investment portfolio. Align with green and industrial transformation. It's a sector where resourcefulness meets opportunity. Whether you're investing in physical commodities, mining companies, or exploration startups, the mining industry remains a dynamic and potentially rewarding choice for investors worldwide. Risks of mining investment. While mining can offer substantial returns and exciting opportunities, it is also a sector laden with various risks that investors must understand and manage. From market volatility and geopolitical instability to environmental issues and operational challenges, mining investments are inherently complex and uncertain. This long-form guide explores the major risks associated with mining investments in detail, helping you make more informed decisions and protect your capital. 1. Commodity price volatility. One of the most significant risks in mining is the fluctuation in global commodity prices. The profitability of a mining project is closely tied to the market price of the resource being extracted. Prices for metals like gold, copper, nickel, or lithium can change dramatically due to global economic trends, supply and demand imbalances, currency strength, especially USD, interest rate changes, inflation or deflation. For example, if a gold mining company plans its operations based on a price of $2,000 per ounce, a sudden drop to $1,500 can severely reduce profitability or even turn the project unviable. Investor tip: diversifying your mining portfolio and investing in producers with low extraction costs can help mitigate this risk. 2. Geopolitical and jurisdictional risk. Mining operations are often located in politically unstable or developing countries. These regions may have rich natural resources but also pose considerable political, legal, and regulatory risks. Changes in government can lead to new laws or increased taxes. Nationalization or expropriation of assets may occur. Corruption, conflict, or civil unrest can disrupt operations. Even stable jurisdictions may introduce stricter environmental laws, higher royalties, or longer permit times, delaying or derailing projects. Example: in 2019, the government of Indonesia forced foreign mining companies to sell majority stakes to local firms, drastically altering foreign investment terms. 3. Operational and technical risk. Mining is an operationally complex industry involving advanced technologies, heavy equipment, and skilled labor. Projects are prone to several operational risks. Machinery breakdowns or technological failure. Poor infrastructure, roads, electricity, water. Natural disasters, earthquakes, floods, landslides. Inaccurate reserve estimates. Lower than expected ore grades. Safety incidents and fatalities. Any of these factors can delay production, increase costs, or result in complete shutdowns. Investor tip: companies with experienced management teams and robust risk controls tend to perform better in the face of operational challenges. 4. Environmental and social risks. Mining activities can have a significant impact on the environment and local communities. These impacts can lead to environmental lawsuits, community protests or opposition, reputational damage and investor withdrawal, project delays due to permitting or compliance issues. Common environmental concerns include deforestation, water pollution from tailings or chemicals, Airborne dust and emissions. Habitat destruction. Social risks may arise from land disputes, lack of local employment, or inadequate consultation with indigenous peoples. Sustainable mining practices and strong ESG, environmental, social, governance, credentials are increasingly required by governments and investors alike. 5. Financing and capital risk. Mining is a capital-intensive business. Exploration, development, and operation often require hundreds of millions of dollars. Financing risks include difficulty raising capital during economic downturns, dilution of shareholder value if the company issues new shares, rising interest rates increasing debt burdens, dependence on commodity prices to attract investment. Smaller mining firms, junior miners, are particularly vulnerable, as they often rely on speculative investors and may not have revenue until years after exploration begins. Investor tip: review the company's balance sheet, debt levels, and funding plan before investing. 6. Exploration risk. Exploration is the riskiest stage of mining investment. Many junior mining companies focus solely on locating new deposits, but most exploration projects never become mines. Risks include inaccurate geological surveys, overestimated mineral reserves, failure to secure permits, unsuccessful drilling campaigns. Even with advanced technology, finding an economically viable deposit remains uncertain. High risk, high reward. While exploration companies can offer significant upside, they also carry the highest risk of total loss. 7. Long project timelines and delays. Mining projects can take 5 to 15 years to go from discovery to production. During this time, investors are exposed to prolonged uncertainty due to delays in permitting and construction, shifting market conditions, cost overruns and scope creep, regulatory changes. Long lead times also make projects vulnerable to unexpected global events, such as pandemics, economic crises, or geopolitical conflicts. 8. Currency and exchange rate risk. Since mining companies often operate in one country, e.g., Peru or Ghana, and sell commodities priced in another, usually USD, currency exchange rates can greatly impact profitability. For example, if costs are incurred in local currency but revenue is in dollars, a strong local currency could reduce profits. Investor tip: currency-hedged investment vehicles or companies that operate in multiple regions may reduce this exposure. 9. Corporate governance and management risk. Poor leadership, lack of transparency, and weak corporate governance can destroy investor confidence. Issues include fraud or misrepresentation of reserves, poor financial management, inadequate risk mitigation strategies, insider trading or conflicts of interest. Due diligence on the company's board, management track record, and corporate governance is essential. 10. Market sentiment and speculation. Mining stocks, especially those of junior exploration companies, are highly speculative. Prices can soar on rumors, news of discoveries, or rising metal prices, and crash just as quickly. Market hype can create bubbles, while fear can cause overreactions. Speculative behavior often detaches stock prices from the underlying value of the company's assets. Investor tip: avoid pump and dump schemes and always research before investing in hype-driven stocks. Final thoughts: risk awareness is key. Mining is a high-risk, high-reward sector. While it offers the potential for impressive gains, it also requires careful analysis, risk management, and a long-term perspective. No mining investment is completely safe, but with the right knowledge, strategy, and diversification, you can navigate these risks and uncover real value. Before you invest, always ask: is the commodity in long-term demand? Is the company financially sound and well-managed? What are the geopolitical and environmental risks? Is the project timeline realistic and adequately funded? What is your own risk tolerance? The future of mining, a deep look into the next era of resource extraction. Mining, one of the oldest human industries, is now undergoing a profound transformation. As the world faces new challenges such as climate change, energy transition, rapid urbanization, and increasing demand for critical minerals, the future of mining will not be defined solely by how much we extract from the earth, but how responsibly, efficiently, and innovatively we do it. This long-form overview explores the future of mining across key dimensions including technology, sustainability, geopolitics, market trends, and workforce evolution. 1. Digital transformation and smart mining. The mining industry is stepping firmly into the digital age. Technologies once seen in sci-fi movies, automation, artificial intelligence, AI, drones, and the Internet of Things, IoT, are now becoming standard tools in modern mining operations. Key innovations. Autonomous vehicles and drone surveillance reduce human risk and improve efficiency in hazardous environments. AI and machine learning optimize mineral exploration, predictive maintenance, and production schedules. Digital twins simulate mining operations in real time to test different scenarios and improve decision-making. Blockchain technology ensures secure, transparent tracking of supply chains from mine to market. Outcome: increased productivity, reduced costs, improved safety, and enhanced environmental management. 2. The green mining revolution. As environmental concerns intensify and carbon neutrality becomes a global goal, mining companies are being forced to rethink traditional practices. The future of mining must align with climate targets and biodiversity conservation. Major developments. Electrification of mining fleets using battery electric vehicles instead of diesel-powered machinery. Solar and wind power integration to reduce dependency on fossil fuels. Water recycling and zero-waste technologies to minimize ecological footprints. Carbon capture and storage at mine sites to offset emissions. Reclamation practices that restore mined lands for agriculture, forestry, or wildlife. Trend: investors and governments are increasingly supporting projects with strong ESG, environmental, social, governance, performance. 3. Critical minerals and the energy transition. The transition to a low-carbon future requires vast quantities of critical minerals. Lithium, cobalt, rare earth elements, nickel, and graphite are essential for electric vehicles, EVs, battery storage systems, solar panels and wind turbines, smart grids and 5G networks. Global shift. Countries are building strategic reserves of critical minerals and encouraging domestic mining to reduce reliance on imports. The US, EU, China, and Australia are leading efforts to secure these resources, leading to new opportunities in exploration of untapped reserves, recycling and urban mining, reclaiming metals from e-waste, developing ethical and traceable supply chains. Future outlook: demand for critical minerals is expected to double or triple by 2040, driving explosive growth in specialized mining sectors. 4. Decentralized and modular mining. In the past, mining was synonymous with massive, centralized projects. But the future may favor small-scale, modular, and decentralized mining models, especially for niche or hard-to-reach deposits. Micromines, smaller, flexible units that can be deployed quickly and moved when needed. Remote and deep-sea mining. Advances in robotics and marine engineering may unlock previously inaccessible resources. Space mining. Though still decades away from commercial viability, interest in asteroid mining is growing, especially for platinum group metals. These innovations reduce environmental disruption and improve access to high-value deposits with lower capital investment. 5. Geopolitical restructuring and national resource strategies. The global competition for minerals is intensifying. Countries are treating mineral resources not just as economic assets, but as tools of strategic power and national security. Resource nationalism is on the rise, with governments seeking greater control over their mineral wealth. Trade restrictions and tariffs on minerals are reshaping supply chains. Regional alliances, e.g., US-EU-Australia partnerships, are being formed to reduce dependency on dominant suppliers like China. Forecast: expect more regional mining hubs and global policies focused on resource independence, ethical sourcing, and supply chain resilience. 6. Human capital and the future mining workforce. Mining jobs are changing. The industry is shifting from manual labor to high-tech roles requiring digital literacy, environmental awareness, and advanced problem-solving skills. New workforce trends. Rise of remote operations centers and AI-assisted control rooms. Demand for data scientists, robotics engineers, geospatial analysts, and sustainability officers. A push for gender diversity and inclusion, encouraging more women and minorities into the sector. Education and training programs are being revamped globally to build a future-ready mining workforce. 7. Ethical mining and community engagement. Communities, investors, and regulators now demand socially responsible mining practices. Mining companies of the future will need to gain and maintain a social license to operate from local communities. Ensure fair compensation, safe labor conditions, and indigenous rights. Support local economies through jobs, infrastructure, and education. Ethical and transparent operations are becoming a key factor in company valuation and public trust. 8. Mining in a circular economy. The future of mining isn't just about extracting more, it's also about using what we've already extracted more efficiently. Circular trends. Urban mining, recovering metals from old electronics, buildings, and industrial waste. Reprocessing tailings, extracting valuable materials from old mine waste. Designing products for recycling, especially in electronics and batteries. Circular mining models could help reduce reliance on virgin materials and improve resource sustainability. Conclusion: a smarter, cleaner, more strategic industry. The mining industry is at a crossroads. Once known for environmental degradation and dangerous work conditions, mining is now evolving into a high-tech, low-carbon, and socially responsible industry. The future of mining will be defined by smart technologies and automation, sustainable practices and green energy integration, strategic resource planning and critical mineral security, ethical engagement with communities and ecosystems. Investors, governments, engineers, and environmentalists will all play a role in shaping a mining industry that not only powers the modern world, but protects it.